Hey everyone, welcome to this session, and I guess we can get started, with the PM Grand Revision, right? So, first of all, let me give you a quick introduction about myself. I am Vishnu Vijay, ACCA, a proud Fin-Trammer who has been teaching students across the globe and across designations, and I welcome you all to the PM Revision session for your upcoming June exam. Okay, folks. So, we will be getting started with as to what we will be discussing throughout this particular session. As you can see on my screen here, we have the complete syllabus area of PM covered over here throughout this particular revision session. And in the first day, which is today, we will be covering the topics, the key topic or key revision areas for the syllabus part A and B. Okay, folks. And then the next day we will be covering part C, and the next part D, and then ultimately part E as well for the upcoming 4 days. So let's get started with the first syllabus area, which is basically part A, Management Information and Data Analytics. Shall we? So as you can see here, I have the first set of basic topics which comes under this particular syllabus area, which is information systems, right? So what exactly are information systems all about? Information systems are basically a set of hardwares and softwares that are there in a particular business to meet its data requirements, isn't it? So that's exactly what is mentioned that's exactly what the information systems are all about. Okay, folks, that's what the term information system is all about. And there are a few technical terms which you learn in this particular syllabus area or in this particular section. And let's just revise through these key topics once again. First of all, we have as to what the internet is, which is kind of like an obvious topic, right? If you think about it, because we use it like every single day in our lives. So it's basically the wide area network which is used by everyone to access information, right? So that's basically what the internet is. And then comes intranet. Now what is intranet and how is it different from internet exactly? Intranet is basically a private network. Okay, folks, it's a private network by certain organizations to which only or in which only authorized personnel can access. Okay, folks, so that's what an intranet is all about. And then we have wireless technology, which is basically accessing the internet through wireless devices, right, without any cables. That's basically the idea. And then we have networks as well. Networks are basically interconnected devices, computers, servers, etc., that can pass information in the quickest way, right? So there are wireless networks as well as there are cabled networks as well, like LAN, LAN, WAN, and all those things, right? So that's basically the idea. So those are some technological terminologies which we just need to remember. That's just it. And after that we talk about internal information, right? So what is internal information and how is it different from external information? Well, internal informations are those information which are generated within the organization, isn't it? So those informations which we generate within the organization, which are confidential and then commercially sensitive as well. Okay, folks, that's what internal information is all about, and it's primarily used by management for managerial purposes, for day-to-day, for managing the day-to-day activities of an organization. Simple as that, right? And when it comes to this internal information, we don't publish this anywhere, right? As in, everything should stay within the organization itself, right? And most internal information would be confidential and highly sensitive, highly commercially sensitive as well, because if it gets leaked out, then we may lose our competitive advantage, we may lose the organization's reputation and stuff like that, right? Or market standing, etc., right? So that's basically what the nature of internal informations are. So since we have these confidential and commercially sensitive information, we should keep it secure, right? We should ensure that no one tries to steal this information, or no one leaks out this information to the general public, right? So in order to ensure that, what all measures can we take? Well, I have a few measures mentioned over here. We can have passwords, right? Passwords to ensure that no unauthorized individual has access to these confidential and commercially sensitive information. We can have physical and logical access controls in place to ensure that unauthorized people are not accessing restricted areas. Let's say, for example, like server rooms of a business, etc. Right? And database security controls are in place as well. So what is a database exactly? It's basically a place where we store all these data, right? As in, data are stored in databases, which are kept securely on, in the server rooms, in the cloud, etc. Right? That's basically the idea. So again, this is more of an access control. We're ensuring that unauthorized individuals are not accessing the database or and leaking out or changing information within the databases. Okay, folks. So that's basically the idea. And of course, there's also firewalls as well, right? So what is the idea behind firewalls exactly? Firewalls are basically those protective layer that we have while surfing through the internet, right? So in order to ensure that we're not browsing through unauthorized softwares that may contain certain viruses and other malwares, etc., we have firewalls to safely browse through the internet. Simple as that. And then there is encryption as well. What is encryption all about? Well, basically, it's basically when let's say that someone hacks into a particular data, right, and gets the information. This particular information will be decoded it would be encoded in a particular jumbled format. Okay, folks, that's basically the idea. Just to prevent unauthorized access, even if someone tries to hack into your system, the data will get jumbled up so that that particular individual who has accessed that particular data is not able to read it or use it as such. Okay, folks, that's what encryption is all about. Okay, folks. And then there's antivirus and anti-spyware softwares as well to work against certain viruses that can infect your system or corrupt your files, etc. Right? And then there's the privacy policies, right, such as the Data Protection Act, which ensures the privacy of personal information of customers that these businesses hold, and the act also ensures that privacy is ensured by ensuring that these companies don't share personal information with other companies or sell out these particular personal information to any other organizations as such. Okay, folks, so that's basically as to what these privacy policies are all about. And then we move on to the next topic, which is basically data and information, right? So when it comes to data and information, what are we looking at? So when it comes to data and information, first of all, what is data? Data is basically raw facts and figures, and then we have information. What is information? Information is the processed data. Okay, folks, or when these raw facts and figures are processed to make sense, it's called information, to put it very simply, right? So it's summarized and manipulated data, enabling decision making as well. Okay, folks, for the purpose of decision making, to put it very simply. And of course, there are certain data processing systems as well, which records, analyzes, sorts, summarizes, calculates, and stores certain transactions as well. Okay, folks. So when we talk about these data processing systems, right, there are many different types, such as the there are many different types of information systems that we have in an organization. We will look into that later. First of all, let's have a look at another aspect, which is basically management accounting information. Okay, folks. So what is management accounting information? Well, over here, the first thing that we have to understand is, the levels of management. Okay, folks, there are 3 levels of management, right? There's the top or strategic level, there's the middle or tactical level, and then there's the operational or lower level as well, right? At the top, we have the key executives like the CEO, CFOs, etc. And then there's the middle or tactical level, which has the departmental managers and people like that. And finally, at the operational level, we have supervisors and other foremen, employees, etc. Right? So at the top level, we have something known as a concept known as strategic management accounting. Right? So strategic management accounting is the idea that management accounting should not only focus on the medium or short term, it should also focus on the long term aspects of an organization as well. Okay, folks, so the idea here is that management accountant these days, like they focus more on more on the long-term aspects or long-term success of the organization rather than preparing the short-term budgets, production schedules, etc. Okay, folks. Earlier that used to be the case. Okay, folks. Earlier, management accountants, they simply used to prepare these job schedules, prepare these budgets and everything, and that was just it. Okay, folks. But as the modern requirements changed, because the public nowadays, they need more and more information, right? So what happened was, all of these information, okay folks, all of the scope of work when it comes to management accounting has increased. Now the management accountant not only focus on the short term or medium term aspects, but also the long term strategic decision making aspects as well. Okay folks, for example, the external environment, they conduct market analysis, right, and obtain insights about the market, the current market positioning, how exactly can the business grow down the line, right? All of these things are looked into as well. What are the risks affecting the business, right? All of these things. So that's what strategic management accounting is all about. We focus on external factors, non-financial and internally generated factors as well. Earlier it just used to be internal factors such as budget creations and stuff like that, right? But now we're including both internal and external aspects as well. And yeah, now moving on to the type of information systems. There are several types of information systems that we have, such as first of all, there is the TPS or transaction processing system, right? So when it comes to the transaction processing systems, what is happening here? We basically record the day-to-day transactions of a business organization using this particular system. Like for example, when you go to a particular supermarket to buy something, right? What happens? You when you buy certain items and go to the cashier, what does the cashier do? The cashier uses a barcode scanner or a QR scanner, right? Scans the product, and the system, okay, folks, this barcode scanner that they have, they captures the data of that product. The product price, the product quantity, right? All these information is captured into your bill processing system, and then finally an invoice is generated at the end, right? So that's a typical example of a transaction processing system, to put it very simply. And secondly, we have management information system as well. Now, what's a management information system? These are basically systems used by the management to get internal information. Okay, folks, remember guys, management information system only focuses on the internal aspects of an organization, alright? And there's also the decision support system as well, right? When it comes to decision support system, it is used at the executive level to gather information, to summarize data, so that it's in a bit more, it's a bit more readable in a bit more easy manner. Okay, folks, so that's basically what the decision support system is. And then there's also the executive information system as well, which is used by people at the top level, right? And what they do is they basically, the system utilizes both internal and external information. Because people at the top level, they wanna take decisions for the long term, right? They take strategic decisions, right? So therefore, they would need both internal and external information to make decisions. Okay, folks, which is why EIS or Executive Information System is also used by the top level. Okay, folks, and they also use the decision support system to summarize the data or to graphically represent data, right? Because people at the top level, they primarily use summarized information. They don't want in detail day-to-day transactions happening. Okay, folks, they just want the overall summarized information so that they can easily take decisions based on that. Okay, folks. And then the next type would be enterprise resource planning systems, or ERP systems as we call it. This is basically one single integrated system that coordinates several activities. For example, an accounting software can be said to be an ERP system. Okay, folks, what does the accounting software do? It creates ledgers, it creates journals, right? It classifies them into ledgers, right? And then the trial balance is created, FS is created, right? So that's basically the thing. Okay, folks, all of these things, it used to be different step-by-step processes, right? But this one particular software can integrate all of these activities in a single point, right? This is what the key benefit of an enterprise resource planning system is all about. Okay, folks, it integrates a single system that coordinates several activities. Simple as that. And finally, there is this modern concept known as the customer relationship management systems as well. And why do we use it for? We use it to add more value towards the customers, okay folks, so that we can increase the customer loyalty, we can retain more customers and help the customers get the best experience from our organization, okay folks. So that's basically as to what a customer relationship management is all about. So yeah, these are some different types of information systems which we have discussed throughout our sessions in detail, right? There are some advantages and disadvantages as well, so keep on revising those and you're good to go over there. Now, moving on to another really interesting topic, which is basically big data, right? So what is big data all about? So guys, big data is basically, as the name suggests, a huge volume of data. That's just it, okay folks? A huge volume of data. So when it comes to big data, there are the 4 V's, right? Not 4, as in now it's 5. In some textbooks it's like 4, for some it's 5, for some it's 6, right? So, but as of now, generically, you need to know about 5 V's of big data. Okay, folks, what are the 5 V's all about? First of all, the first V stands for volume. Okay, folks, volume means that it's a huge amount of data. That's basically as to what it means, right? And secondly, we have variety. Okay, folks, big data includes a huge set of variety of data that are there, right? It has a diverse amount of data within it, right? And then the third V stands for velocity. Velocity stands for the speed at which we are getting that particular data, and we can get data in like a fraction of seconds as well, right? And then the fourth V, what veracity means. And then the fifth V stands for so the fifth V basically stands for value as well, okay folks, which means that whenever we are extracting big data, we need to ensure that the value, as in it is cost effective, right? So that's basically something that we need to ensure as well. And what else? So why is big data, what's the relevance of big data when it comes to performance management exactly? Well, it helps us to gain insights. That's basically one thing. Which means that we can analyze data in such a way that we can use it to conduct analyses and maybe identify patterns, trends, etc. Right? So that's basically as to what gaining insights mean here. Okay, folks. And then secondly, it leads to better forecasting as well. By analyzing these trends and everything, we can forecast what could happen in the future to a certain extent, right? So that's basically what the idea here is. And of course, certain business processes can be automated to a certain extent as well. Okay, folks. So and finally, detailed and up-to-date performance measurement as well. Now, what is the difference between performance management and performance measurement? Performance management is what we are currently doing as of now, right? But what is the difference between performance management and performance measurement exactly? Performance management is all about understanding the objectives of the organization and then managing the business to achieve that objective. Okay, folks, that's basically as to what that concept is. But when it comes to performance measurement, it's all about measuring the extent to which we have done that. Okay, folks. So what we do is we set up certain KPIs, key performance indicators and stuff like that, ratios, etc., to measure the extent to which we are successful in achieving our objectives. Okay, folks. So that's basically as to what performance measurement is all about. So using these big data and data analytic techniques, we would be able to perform an in detail and up to date performance measurement as well, is what we're trying to say. Okay, folks. So yeah. And finally, we move on to data visualization as well. Okay, folks, so what is data visualization? Data visualization is the display of information in a graphical format through bar charts, right? Through pie charts, through column charts, Gantt charts. There's a wide variety of it, right? So it's all about summarizing the information in such a way that it's created in an understandable manner. Right? So that's basically as to what the idea is. And the purpose is just so that people can easily understand the information and analyze the information as well. Okay, folks, there's no point in having thousands and thousands of rows within an Excel sheet or data within thousands and thousands of rows within an Excel sheet, right? We need summarized information so that we can get more insights, more information, ask more questions, and take better decisions as well, right? So that's basically as to what data visualization is all about. And there are various types. These are all very basic topics, which is why I'm not going too much in detail during this revision, right? We talk about bar graphs, pie charts, right? And then scatter diagrams as well, right? And there's a wide variety of other charts as well. So yeah, that's basically as to what this is. Okay, folks. Now, what else? So yeah, that's basically as to what we've learned in syllabus part A, which was in relation to the information system, management information systems. Now we move on to part B, which is basically in relation to specialist cost and management accounting techniques. Okay, folks. So what exactly did we learn here? So we learned about certain different types of costing methods, right? So first of all, we looked at as to what absorption costing is. Absorption costing is basically the traditional method of costing, right? And what do we do there? We're basically trying to allocate the indirect cost to the cost of each unit. Okay, folks. So that's basically the idea. Then I'm looking at a scenario where I'm manufacturing multiple products. Let's say product A, B, and C, right? Direct costs are always directly attributable to each of the products, right? Right? Let's say that I have two products, product A and product B, right? And I'm manufacturing product A and B within a particular factory, right? Both of them are produced in the same factory. Now, where do I allocate the factory rent to exactly? That's basically the thing, right? So what we do is there are some indirect costs which are not directly attributable to each of my product. So what I'm going to do is I'm going to calculate the total overheads or total indirect costs that I have incurred, and then I'm going to apportion it to each of my units or each of my products, right? This is what we do in absorption costing. Okay, folks? And we also have a bit more modern version of this, which is basically ABC, right? Activity-based costing method, right? In activity-based costing, what do we do? Identifying cost of supporting activities or identifying the cost drivers of supporting activities, isn't it? Because in ABC, our primary focus is on the cost of those costs. Okay, folks, what exactly are the driving factors of the cost, and we apportion each type of or each category of cost individually. Okay, folks, so this categorization process is known as creating cost pools. So we create the cost pool and then we allocate the cost to each individual products. This is basically as to what we do in ABC. Okay, folks, to put it very simply. Now, secondly, we also have target costing as well, right? So within target costing, what do? We calculate the desired profit and subtract it from the, target costing is basically a step-by-step method. One second, yeah. In target costing, what we do is like it was a step-by-step method, right? So let's discuss that first of all. In target costing, what is the first thing that we do? We determine the sales volume, right? So how much units of products am I planning to sell? Right, and then I determine the selling price of that particular product, a desired selling price, and then a desired profit margin as well. Okay, folks. After determining both of these things, I'll calculate my target cost. I'll calculate my target cost itself. What is the equation? Desired selling price minus desired profit margin. Okay, folks. Selling price minus profit margin basically would give you your target cost. Once the target cost is determined, what we do is, we have a look at the estimated cost of production, right? Target cost is just a desired amount of cost. This is what I'm expecting the cost to be. But what it actually is could be something different, right? So I look at the actual cost that I've incurred, and then, I compare it with the target cost to calculate the cost gap, isn't it? Right, cost gap is calculated, which is basically target cost minus estimated cost of production, and then I take initiatives to close this gap as well. Okay, folks, I take initiatives like reducing non-value adding components or something like that, which is basically something that we do in value analysis, right? And then which is a systematic explanation by specialists to see what are the value adding activities in my business and what are the non-value adding activities. Okay, folks, I eliminate the non-value adding activities, eliminate unnecessary design cost and stuff like that to bring the actual cost down to the target cost. Okay, folks, so that's basically as to what the idea here is. Now, Moving on to another type of cost, which is basically life cycle costing. And what do we do in life cycle costing? Basically, we track the revenues and cost over a product's life cycle, right? We consider the entire life cycle of a particular product. What are the different stages of the life cycle? We have development, we have introduction, we have growth, we have maturity, and then decline, right? So in each of these stages, we calculate what are the costs that are incurred, what are the revenues that we have obtained, right? And then we calculate the grand total to determine the cost per unit. Okay, folks, that's basically the idea behind life cycle costing, to put it very simply. And what else? There's also another concept that we have to learn before we look into the other cost accounting technique, which is throughput accounting, right? Before we look into throughput accounting, we need to have a look at as to what the JIT stands for. What is just in time, right? So let's have a look. So JIT is basically a pull-based system, right? So the idea here is to start the manufacturing process when we receive customer orders. Okay, folks, we're not gonna, conduct the manufacturing. We're not gonna keep inventories here. Whenever we receive the customer's order, then we start our manufacturing, right? So that's basically as to what just-in-time is all about. So production system pulling work through in response to the customer's demand. That's basically the idea. And yeah, there we go. Then there's another concept known as total quality management as well. So what is total quality management? Total quality management is basically having a zero defect policy when it comes to quality. Okay, folks, we're ensuring that there is no quality issues, because whenever there is a quality issue, we incur unnecessary cost, right? So the idea behind total quality management is to ensure quality and get everything the first time itself. Okay, folks, get everything done right the first time. That's basically the idea. And the definition here is that continuous improvement in quality and productivity. Okay, folks, we need to ensure that there's always Kaizen involved. What is Kaizen? Basically, having continuous improvement in small incremental steps. Okay, folks, so we're ensuring that the quality is improved on a continuous basis and productivity is increased on a continuous basis without any inefficiencies, without any wastages, without any other problems or unnecessary cost. Okay, folks, so that's basically as to what total quality management concept is all about. The reason why both these concepts are kind of relevant here is due to throughput accounting. Okay, folks, so in throughput accounting is basically conducted when in a particular JIT environment having TQM principles in place. Okay, folks, so that's basically the idea. So when it comes to throughput accounting, what's the idea here? Our objective here would be to maximize throughput and the cash generated from sales, right? Maximize throughput and then cash generated from sales. So throughput accounting is different from the conventional accounting that we know. When it comes to the conventional accounting, keeping inventory is considered to be good because inventory is an asset, right? But in throughput accounting, inventory is a result of inefficiency, because throughput accounting operates in a JIT environment, right? So keeping inventory is bad because that's not contributing to anything. Okay, folks, so that's basically the idea. And then what is throughput exactly? Throughput is basically sales minus material cost, isn't it? Sales minus material cost is throughput. And cash generation, and we're ensuring that we don't look at profits, or we do look at profits. Profit is basically throughput minus the factory cost. Okay, folks, so that's basically how the concept works here, isn't it? And then there's also the throughput accounting ratio as well, which is kind of really important to remember as well. There could be MCQs and stuff like that tested, right? So what is the throughput accounting ratio all about? Throughput per bottleneck resource divided by factory cost per bottleneck resource, right? That's basically the equation for throughput accounting ratio. And there are multiple MCQs that can be tested here, so just be very mindful of that. Okay, folks. And yeah, and then we move on to the next management accounting techniques, which is basically environmental management accounting. And what is environmental management accounting all about? Analysis of financial and non-financial information for environmental management. Okay, folks. So we look into the environmental cost. Now, the problem with environmental cost that it's always hidden in the system and it's kind of difficult to detect. Okay, folks. However, by focusing on the environmental cost, we are ensuring that we are recovering all the cost through our selling price as well, isn't it? Because the idea behind selling a particular product, what is that? Or the idea behind setting a selling price is to recover all the costs that I've incurred plus gain a profit as well. This is the objective, right? So if I'm ignoring the environmental cost, am I actually recovering the entire cost that I've incurred? No, not really, right? That's exactly why it is important to look into the environmental cost as well. So environmental analysis is conducted on both on the basis of financial information as well as non-financial information as well. Okay, folks. So there are different techniques that we use as part of our environmental management accounting technique. So let me quickly go through those. First of all, there is input-output analysis. Okay, folks. So over here, the concept is kind of simple. Like in every manufacturing process that are there, if I'm inputting 100% of raw materials into the system, then I should be getting 100% as an output as well, right? But when it comes to reality, that may not be the case, right? If I'm inputting 100% of input, then chances are I may only get 80% as my finished goods from the process, and the remaining 20% would be wastage, right? So that's basically the idea here. Okay, folks, that's what an input-output analysis is all about. Okay, folks, what goes in must come out of that particular system appropriately as well. And this wastage is my environmental cost. Why? Because wastage would have certain consequences, like for example environmental consequences, right? For example, how do we dispose of this particular waste? There might be certain charges and might be some cost involved in disposing these wastes in a bit more environmental friendly manner, right? So that's basically the idea. Okay, folks, that's what this particular analysis is all about. We analyze the input and the output and see what percentage is the good output and what percentage is the bad or the negative output. Simple as that. And then there's another concept known as environmental activity based costing as well. But before that, so there's one more thing, as in there's also the flow cost accounting technique, right? Before that, there's the flow cost accounting technique as well, right? So when it comes to the flow cost accounting, the idea here is kind of similar to what we have looked at in input-output analysis. Okay, folks. In input-output analysis, what do we do? We look into the inputs and outputs, and we categorize the output into the good output, or positive output, as well as the negative output as well, right? So kind of similar to this, we also have flow cost accounting as well. In flow cost accounting, we look at three categories, okay, folks, of the process, which is basically delivery, right? And then there is materials, system and delivery, as well as the third aspect, which is in relation to the flow of the goods. Okay, folks. So that's basically the idea, transportation and stuff like that. Okay, folks. So in each of these categories, what we do is we have a look at the output which we have obtained, and we categorize the output into both positive and negative products. Okay, folks. Positive is basically the good output, and negative is basically the bad wastage and stuff like that, which can incur certain cost to dispose of and stuff. Okay, folks. So those negative items are considered to be my environmental cost as well. Alright. And then comes environmental activity based costing as well, isn't it? So in environmental activity based costing, what are we looking at? We basically use the activity based costing principles into environmental accounting. So again, the idea here is to identify the key cost drivers of these environmental costs. What exactly is driving the environmental cost in a particular business is what we are ensuring. Okay, folks, that's what environmental activity based costing is all about, to put it very simply. And of course, now we move on to another topic, which is basically sustainability, which is kind of like a hot topic at the moment, right? Because sustainability is a really big issue at the moment, and there are a lot of, let's say, accounting standards which are in progress in relation to this, and several other standards which are coming into being at the moment. Okay, folks. So, what is sustainability? Meeting the present needs without compromising the future generations' needs, right? That's basically the concept, to put it in very simple terms, right? And the idea here is to ensure that whatever decisions that we are making in a particular organization, it should not in any way affect the long-term, or the future generations, basically. Okay, folks. So that's basically the idea, right? That's what sustainability is all about. Making decisions with a long-term focus without affecting the needs of the future generations. That's basically the idea, right? Yeah. So, there are many different ways to go about this. There are many different concepts that we look at as well as part of sustainability. For example, there's this concept known as the sustainable value creation inputs as well, right? So here, what we do is we focus on certain aspects such as the integrated reporting. Okay, folks, like there's this new way of reporting known as the integrated reporting framework, right? So the idea behind the integrated reporting framework is kind of easy. We focus on 6 capitals. Okay, folks, we focus on 6 capitals of that particular business and provide information based on these 6 capitals. What are the 6 capitals? Basically, we have financial capital, manufactured capital, intellectual capital, human capital, social and relationship capital, as well as natural capital as well, isn't it? So financial capital is kind of easy. It's all about the financial information of that particular organization. Manufactured capital involves the tools and equipments which we use in conducting the manufacturing process and information in relation to that, right? Intellectual capital is primarily focused on the the knowledge levels that we have, or the or the intangible products that we have and stuff like that, right? The patents and all these things, right? That's basically as to what intellectual capital relates to. Human capital is basically our human resources and the level of knowledge that they hold. Okay, folks, simple as that. And then social and relationship capital. How is an organization responsible towards their community, towards the other stakeholders such as the generic public, right? So this is basically as to what social and relationship management capital refers to. And then we have to look at things like the corporate social responsibility or CSR activities that are conducted by the organizations and stuff like that. Okay, folks. And finally, there is the natural capital. Okay, folks, natural capital involves things like utilizing of non-renewable resources. Are we using it in a responsible manner, or are we over-exploiting it or not? Okay, folks, that's basically as to what the what the natural capital involves majorly, right? So for all these capitals, what we do is we issue the report, because earlier, like, people preferred the financial information of a business as compared to all the unnecessary factors, right? So, however, now people are more interested in knowing about the non-financial aspects as well. How is the business doing well operation-wise? How exactly is the business responsible towards the community? Are they doing something for the environment, right? All this information is demanded by the public, which is why we expand the report into we report or we publish the integrated report, which showcases all of these financial as well as non-financial operational information of the business as well. Okay, folks, so that's basically the idea. And then we move on to the last concept, which is basically sustainability strategy perspectives. So what's the idea here? Integrated and externally oriented focus. Alright, so the idea here is to look at 4 perspectives. Okay, folks, we can take sustainable decisions, or we can implement a sustainable strategy by focusing on these 4 perspectives. What are these 4 perspectives? Value creation from capitals. Okay, folks, value creation from capitals, as in, from the 6 capitals that we have: financial, manufactured, intellectual, human, social and relationship, as well as natural, right? From these 5 capitals, how can we create value to our stakeholders, right? That's basically the idea. Okay, folks, stakeholders involves not just the customers but also the shareholders, the management, the employees, the community, all of these people, right? So how exactly can we add value to these people? That's basically one perspective which we have to consider when implementing our sustainable strategy, right? And secondly, the next perspective is the stakeholder perspective, of course. How are we impacting each stakeholder category, right? We can use things like the stakeholder mapping matrix or something like that to prioritize the stakeholders and ensure that we are adding value to each and every one of those stakeholders as well, right? And then we talk about mega trends affecting opportunities and threats, right? So the mega trends involves any huge event, significant global event that has happened, or any other events for that particular matter, which has given rise to business opportunities or threats for that matter as well. Okay, folks. So we look into those factors, and finally we look at the customer preferences as well. Okay, folks. How is the customer's taste and preferences changing over the years, and are we able to structurize our products, structurize our services to cope up with these as well. Okay, folks. So that's basically as to what sustainability strategy perspectives focuses on. Basically a model that we can use in order to make decisions. Okay, folks, long-term sustainable decisions. That's basically the idea. Alright, so yeah, that's basically it. That's basically all about some of the key topics that are there when it comes to the syllabus part A and B. Keep on revising through these topics again and again continuously, and of course it's really important that you guys practice some questions in relation to these as well. Okay, folks, so keep on practicing some multiple choice questions so that you are well aware of what's going to happen, so that you are well prepared for the exam, questions that can come up, and you're familiar with how certain questions are asked and everything. Okay, folks, so keep on practicing as much as possible till the day of your exam. Keep on revising these concepts, and I'll see you later in the next session tomorrow, where we will continue with part C. Okay, folks, which is in relation to the decision making techniques as well. So yeah, that's basically all I wanted to cover in this particular session. I hope you enjoyed it, and feel free to ask any questions that are there. I'm always ready to answer those. So yeah, you can post your questions just below the chat box, and we'll get to it as soon as possible. Okay, folks. So that's basically it. That's basically all I wanted to cover. Thank you for joining in, and I'll see you later tomorrow. Till then, this is Vishnu Vijay signing off.